markets are green across the board, with the Dow up more than 200 points. This after better than expected jobs report. Employers added 4.8 million jobs in June, and the unemployment rate fell 13.3%. That's where it was in May to 11.1% in June. Now, President Trump said today that the jobs report proves that the U.S. economy is roaring back. Take a listen.
Today's announcement proves that our economy is roaring back. It's coming back extremely strong. We have some areas where we're putting out the flames or the fires, and that's working out well. We're working very closely with governors, and I think it's working out very well. I think you'll see that shortly.
President Trump there taking a rosy picture of the jobs report, but it's important to remember that while it did beat expectations, the survey period for the jobs report used data from the middle of May through the middle of June. So what it shows is the state of the labor market before we saw this spike in coronavirus infections and certain states rolling back their reopening plans. Now, we're going to be joined by Octavio Marenzi, CEO of Opimas. Octavio, is the president painting too rosy a picture of the state of the labor market?
Well, I think you have to admire his optimism. I mean, he's been relentlessly optimistic on the bounce back of the US economy. I would say it has been really encouraging. I think many of us have been surprised by how strongly employment has snapped back. But it's interesting if you look at slightly more real-time information, which is, of course, the initial jobless claims are still very, very high. Those have improved as well. So we're still seeing about 1.4 million Americans per week file for jobless claims. That is a historically very, very high number. That is better than it was in the previous couple of months. But to a certain extent, it's a bit difficult to reconcile those two things, to see this enormous gain in employment, but still 1.5 million people almost filing for unemployment. So it sort of becomes a bit difficult to navigate and understand really what's going on. And I think it can be explained a few ways. First of all, as you pointed out, the employment report came out from the middle of June. And so we're not exactly looking at the same time period, whereas the initial jobless claims come a bit later. So that is perhaps a more real-time indicator of what's going on. So we've still got 1.4 million people filing for unemployment. And I think if you dig a bit deeper into the numbers, what you'll see is that in the restaurant business, restaurants and bars saw a really significant bounce back in their employment in June. So 1.5 million jobs were added in that sector alone. So that accounts for a very, very large part of this return to employment that we've seen in the June jobs report. Now, if we see a pause in the rollback of lockdown rules or reissuance of lockdown rules of restaurants and bars and things like that get locked down again, as you pointed out earlier, we've seen spikes in COVID cases in Texas, in Arizona, and Florida. That could well reverse those job gains because they were very dependent on the restaurant business and then also on the retail business. And those things are in the front lines. And if things look bad, those employment numbers might take a nosedive again.
And the Trump administration is basically saying that they're going to keep opening up America. So what can employees who are feeling edgy right now, given the ongoing layoffs, do? Are we going to see a turning point when it comes to the labor market? Or do you expect us to continue to lose over 1 million jobs every single week?
Well, I think the job losses are very difficult to actually figure out what's going on within that because they're not really historically comparable. And one of the major reasons for that is that unemployment benefits have been massively increased and eligibility for unemployment benefits has been expanded enormously. So we can't really look at those numbers and compare them to a year ago and say they really mean something. So one has to sort of, I don't say take them with a pinch of salt, but they are very difficult to compare historically. They're just not the same thing at all. So who knows if 1 year ago we had these kinds of benefits available and these kinds of eligibility requirements lowered so drastically, what the unemployment numbers would have looked like. So our basis for comparing the past is somewhat off, and it really aren't comparing the same things over time. But it looks like we are going to continue to see this for a while. These unemployment benefits will carry on being as generous as they are for the foreseeable future. So that probably means a lot more people will be tempted to file for unemployment.
Yes, well, a bright spot we are seeing in the labor market. Research has shown that women in their 30s and 40s can see their wages and careers start to stagnate, especially if they take on more responsibilities and raising a family, especially if they're doing it on their own. But Wells Fargo came out with this new note that actually spotlights the fact that labor force participation can actually increase temporarily because more women working from home may be able to participate. What are your thoughts on that?
Well, I don't know if that's going to be a temporary phenomenon. So that's a question to be asked. How temporary will this really be? A lot of our clients that we've talked to have basically said, we've got the vast majority of our employees working from home now, certainly in the professional services space. So if you look at banks, insurance companies, law firms, things of that sort, a lot of them basically said, you have to work from home, obviously, but a lot of them have not noticed any difference in productivity. So their employees are just as productive as they were in the office. So a lot of these firms are going to start scratching their heads and saying, why are we renting or paying for this enormously expensive real estate sort of in the financial centers around the world that just cost a huge amount of money? Aren't we better to move more to a work from home model in general? So I think we're going to see a permanent change in the way the workforce works, not just in the US, but this is around the world, in Western Europe too, and in Japan and other places as well. A lot more people working from home, and I think that's going to be a permanent change. So I agree it's going to help certainly women in their 30s and 40s who have decided to stay at home, and the commute is difficult and being away from the children is hard. So that will certainly help them. I disagree with that will be a temporary phenomenon. I think there's going to be a permanent one. And that, of course, raises the question, what happens to commercial real estate and all these financial districts? What happens in terms of the real estate values there? And what happens to commercial mortgage-backed securities as a result of that? So I think we're going to see a major shift in that. I think it's going to be permanent. I think a lot of companies are going to say, we're fine doing it this way. It's worked well. We figured out how to manage a remote workforce, and we're going to do that in the future permanently.
And I just wanted to touch briefly on stimulus measures. So Republicans have come out and said that we can expect another round of fiscal stimulus possibly by the end of July. What are your thoughts on the additional $600 per week in unemployment benefits that were added? Do you expect those to be added as a part of that new round of fiscal stimulus?
Well, I think they put it into that bill, so I would expect to see that come out. I mean, there's all sorts of stimuli bills and acts and packages that they've talked about, most notably the infrastructure spending that they want to push through, where they want to spend $1 trillion on infrastructure. But that's the kind of thing that takes quite some time to filter through into the economy to really have an impact on jobs. Large infrastructure projects just take a very long time to plan, and the engineering and the planning on those things take a very long time. So that's not going to have an impact very quickly. Increasing unemployment benefits and extending them, I think it's going to have the slightly perverse effect of increasing unemployment, in the sense that more people will be tempted to say, well, I'll take some time off and I'm sort of at the margin, and I could get a job and I just could take unemployment, and the unemployment benefits are much more generous than the past, and so I'll take that. So unfortunately, as you finance unemployment, you encourage it as well to a certain extent. So I think it's necessary to provide that, but you have to bear in mind there's a downside to that as well.
We'll definitely keep monitoring it. Octavio Marenzi, CEO of Opimas, thanks so much.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.